All right, let's talk about one of the most disrespectful feelings in the world. And that's when you finish your tax return, the screen loads, and then you see you owe. So now you sit there blinking like, yo, for real? Like, me? I owe? And for what? Guarantee you probably mess up your whole mood for the day. So today we're going to break down the reasons why people owe taxes. And this applies to employees, business owners, side hustlers, anybody who makes money. And spoiler alert, most of the time it's not because, you did something wrong or we did ever do anything wrong. It's just probably because you don't understand the system and, you got to learn the game. So, welcome back to another episode of Millennial Gems. I am your host, AKILA. Look at that, I can't even spell my name. And yeah, let's talk about the reasons we get hit with that tax bill, why we owe. So make sure you get your pen and pad. Let's get right into it. First thing, you didn't withhold enough. So let's be honest, as employees, when if we owe, it's because enough taxes weren't withheld from the paycheck. The IRS, when you first go into a job, you fill out the W-4 form, which determines, your entire tax year. So, if you get your W-4 wrong, your refund is cooked. The IRS, they let you decide how much to withhold. But if you're guessing and hoping the IRS got it, then newsflash, they didn't. So if you just happen to claim too many allowances, if you marked yourself exempt, if you claim dependents that you don't actually support, if you claim tax credits that you weren't entitled to, or if you tried to bring home more money, congratulations. You played yourself. You got to make sure you fill out that W-4 form correctly. So that's one reason there is just because you didn't have your the right amount of taxes withheld from your paycheck. So the second thing is, let's say you have a side hustle, right? And you didn't plan for taxes. You have a side hustle, you have a business. I'm specifically speaking here to those who do a lot of side gigs and stuff like that. If you make any type of money outside of your job, whether it's DoorDash, Instacart, photography, personal training, Shopify, YouTube, you owe taxes on that income. There are no taxes withheld. Because you do know when you get those payouts, right, you're receiving the entire payout, the entire profit. Nothing's being taken out. So you have to make sure you account for all that money that you earn and put some money to the side for when tax season rolls around. And that's how people end up getting blindsided. You make $8,000 extra, then you spent it. But then, the IRS, they say they want their 20 to 30% of it, So, and now your W-2 refund isn't enough to cover it. So, just a simple rule. If you have self-employment income, just make sure you're setting aside taxes throughout the year. So, and make sure, like I said, at least 20, whatever you make out of your profit for the day, just set 20 to 30% of your profit, whether you take profit every day, whether you do profit every week, just set 20 to 30% of it aside for taxes. All right, number 3, you didn't pay estimated taxes. Now, this can come a little bit more towards, this probably applies a little bit more towards the business owners. So if you have business income, the IRS, I think I've already talked about this, is that you owe quarterly, not annually, quarterly, every 4 quarters. We talked about the dates that are owed: April 15th, July 15th, September 15th, and January 15th. those are the dates. So, yeah. So if you don't pay your quarterly estimated taxes, then you're gonna get hit with a tax bill, plus the penalties, plus the interest, and then now you definitely don't get no refund back because now you owe all that. You should think of it like rent. Like if you don't pay during the year, the balance at end is gonna be disrespectful. So if you're a creator, if you're a business owner, you're making consistent money, you should never be paying $0 all year. Any money you owe is always got to be paid back or paid to the IRS. Unless you figure out identify some tax loopholes and stuff like that and take some credits and stuff like that to help lower your tax bill. But we don't, like I mentioned on the last episode, we don't want to try to avoid the IRS. We want to just try to lower the amount of taxes we pay, period. Yeah. So number 4, you probably lost deductions because your books are garbage. Listen. Ask yourself, are your books clean? No, you know what? Don't even have to ask yourself. Check to see if your books are clean. Does your money look like a crime scene? If you can't prove expenses, you lose deductions. Losing deductions means the tax bill goes belly up. The IRS does not accept, I know I spent it on the business. They want receipts, statements, bookkeeping. I keep telling y'all, disorganized finances equals higher taxes every single time. Do not give the IRS a reason to come knocking at the door. Make sure your bookkeeping and all your money is organized. All right. Number 5, right? So your income went up, but your withholding didn't. So you got a raise. Oh, excuse me. You got a raise. Or maybe you picked up overtime. Or maybe you switched jobs. But you didn't change any information on the W-4, right? Well, your income increased, but your withholding stayed the same. So now you're in a higher tax bracket with the same old settings. You know what that means? Your refund evaporates. If you earn more money, you have to adjust the withholding. Or else the IRS is going to adjust how much money you're supposedly supposed to be refunded back. You don't adjust your withholding, they're going to control the outcome. All right. So next we have number 6. So you don't qualify for the credits you used to get. Now, this one definitely might hurt some people's souls. So if you're used to getting the EITC, which is the Earned Income Credit, the CTC or the ACTC, which is the Child Tax Credit, and the Additional Child Tax Credit, which is, well, the CTC is actually the non-refundable part of it, but the ACTC is the refundable part of it. So it's actually a partially refundable tax credit. But yeah, if you don't receive that, household benefits or even the education credits like the Lifetime Learners Credit, the LLC, or the AOTC, which is the American Opportunity Tax Credit. All these credits here, they help lower your taxes on a dollar for dollar basis. And so maybe then you get a raise and then you get pushed over the income limit, right? And you didn't even know. Suddenly, now your $6,000 refund you used to turns into $300 or worse, you owe. And this is because, tax credits, they have a certain threshold. There's a certain limit that you can't
Let's be real. Tax season doesn't start in January. It starts when you get serious about your money. At Millennial Gems Financial Solutions, we help self-employed hustlers, entrepreneurs, business owners stay ready year-round. Whether it's clean bookkeeping, tax prep, or setting up systems so you can finally understand your numbers, our goal is simple. Provide clarity, protect your peace of mind, and help you keep more of what you make. You've worked too hard to give Uncle Sam more than you owe. So let's fix that. Visit millennialgemsbk.com to book your consultation today.
in order to qualify for tax credits. So like I mentioned earlier, if your income, raises and if, come tax season, you find out that it actually pushes over past the limit, well, now you can't take advantage of the usual credits that you're used to because you had a bump in income. Which means now you can't take advantage of the tax credits that are out there. And, this happens every year to folks, to my understanding, this happens to folks every year. Because, some people just don't understand credit income limits. So you have to understand, if you're used to taking these credits during tax season, then you need to understand, what the limits are. I mean, you can also speak with the tax professional to, figure that out too. But if you're used to getting them and then all of a sudden you have a crease in your income, well, you can probably say bye-bye to that. All right. Number 7, right? Which we kind of almost just mentioned briefly. You had a job change and 2 employers withheld wrongly. So, again, how we kind of talked about earlier with the W form, the W4 form, the first part where, you didn't get enough taxes withheld. Sometimes it's not, like I said, it's not always going to be your fault, in the W4. It could be the employers didn't do their part. So if you had 2 jobs in 1 year, even for a month, each employer is supposed to withhold taxes based only on their job, right? Because things can get really messy if not done correctly. So, but obviously, together you put your total income, obviously your total income puts you into a higher bracket. But the employers, obviously, they have to withhold their 7.65% from you while they, based off their own. They can't, just because you have another job, they can't dip into somebody else's pot for that. So, because the IRS taxed you based on your total income, it's not what each job is assumed. This is why people say, I made more this year, but got a smaller refund. Well, yeah. You made more, you got more. Yeah, you made more, you got a smaller refund. It happens. IRS, again, like I said, the IRS taxes you based off your total income, not what each job is assumed. So, let's get into number 8. You withheld 0 federal taxes, and you didn't notice. I don't know how you can't notice. This one's kind of crazy. So, I'm sure everybody finds out they owed because supposedly their employer never withheld any federal taxes, right? But it could also be the fact that you just didn't look at your check stubs all year. And so you could only assume that, they're taking out the taxes, but no. And now payroll says, we're just going to let Jesus take the wheel. Anyway, always just check your pay stubs. Very simple. Just make sure that the tax is being taken out, because like I said, if you want to owe, just make sure everything is going according as planned, as it should. All right, number 9. You cashed out investments or any type of like crypto or anything like that. If you sold stocks, if you cashed out any crypto, if you sold your options, if you flipped any NFTs, congratulations. You just created a taxable event. And if you made profit, well, now you got capital gains tax. So even if you lost money, you still need to report it. And people tend to forget about this. I know I've done it early on. And then you wonder why you owe, almost $1,500, $2,000 out of nowhere. Yeah, you got to report all of that stuff. If you're heavily involved in investments and stuff like that, and you sell any of those assets, you're going to have to pay up for that. All right, so that's 9. All right, number 10. We'll just go through 2 more. So say you kind of still staying on the investment part of it. Let's just say you withdrew money from early retirement, right? From like a 401k, IRA, any type of retirement account. And imagine you did this before the age of 59.5, which is the threshold. If you withdraw before then, you're gonna have tax penalties. And so the IRS, they're gonna hit you with regular income tax plus a 10% penalty for withdrawing early. That alone can create a tax bill, even if your W-2 withholding was perfect. When you invest in assets, you need to leave them alone. Don't sell them off, because, like I said, then you have to pay capital gains tax. Especially, and then you have, things like long-term and short-term capital gains tax. So short-term is any assets you held less than a year, and then long-term capital gains tax is anything you've held a year or over. So don't retire. I'm not saying don't retire. Don't withdraw from your retirement accounts too early. And then the last one, you probably just didn't plan. You just didn't plan. Most people owe because they spend a year on autopilot and hope their tax season goes well. But let's be honest, tax game is a real feisty game, man. And they're not supposed to be emotional. Taxes are not supposed to be emotional. All it is math, strategy, and planning. And if you don't plan, taxes are going to plan you. If you don't plan when it comes to tax season, or just throughout the year, you better plan to pay taxes. Regardless. All right, so if you're tired of being surprised at tax time, if you want to stop owing and start planning, well, now's the time to get help. You see, if you hit the link in the show notes, you can book a free consultation with me, whether it's for bookkeeping or tax prep, with my company, Millennial Gems Financial Solutions. We will look at your income. We will do your withholding. We will look at your withholding, your business, your side hustle, and, you know, just help build a plan so that way we can keep you out of the people who are going to owe Uncle Sam some money. And so, if you are looking for assistance, you can also purchase my tax preparation checklist for all individuals and business owners for all the items that you are going to need. You can also, if you are a business owner, you can also check out my A to Z deductions checklist. They are both completely free on the website, millennialgemsfs.com. Outside of that, until then, keep your money clean, keep your tax plan tight, and stop letting the IRS sneak attack you every goddamn April. I'll see you on the next one. Peace.